Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, Bitcoin is running into important support, while Ethereum just confirmed a new bearish price target after this break to the downside in the short term, which I'll talk more about later in the video, so definitely watch to the end. First of all, I'll quickly mention the reason as to why some of these coins in particular are dumping like crazy, because some of these coins like BNB, Solana, Cardano, Matic, Filecoin are down more than 20% just over the last few days. Some of these coins down more than 20% in just the last one day. And the reason behind that is due to the SEC situation, which I explained in more detail in this video that I posted around 4 days ago now, warning that these coins are just about to drop. And interestingly enough, that warning video was actually my least viewed video over the last 1 week. So for the few of you out there that did actually watch that video, I hope I did help you. But in case you missed that video, I'll definitely recommend giving that a watch if you're wondering why these coins in particular are crashing hard, because they're likely going to experience some more bearish price action before things get better. But anyway, with that being said, getting into the Bitcoin part of this video, this is on the weekly Bitcoin chart, and as you can see here, just recently nothing much has really happened here in the price of Bitcoin on the larger time frames. And so technically speaking, this pattern is still currently forming on the weekly chart, but is not yet confirmed. I want to make that clear, because this pattern would only actually confirm if we see a recovery back up towards around 30.5k at some point within the next 2 months or so. And then if we see a confirmed breakout above 30.5k, of course, that would confirm this giant cup and handle pattern, which would be an extremely bullish signal on the larger time frames. But remember, we still need to see that recovery back up towards 30.5k within the next 1 to 2 months or so. But anyway, just taking a quick look at this Bitcoin chart. This is on the 4-day time frame, taking a look at the Bollinger Bands and the Bollinger Bands width indicator, which over the last 1 day hasn't really changed. So if you're new to the channel and you missed my last video on the channel, definitely check that video out if you want to know more about what's happening here on this 4-day Bitcoin chart and these indicators right here. And while we're on the 4-day Bitcoin chart, taking a look at the super trend indicator on the 4-day Bitcoin chart, and as you can see, as of right now, this is technically still in the green. And if you're looking at the history of this indicator, generally speaking, when this super trend indicator is in the green on the 4-day time frame, that usually means we're in a larger bullish trend that usually lasts multiple months. But then, of course, when this indicator flips back into the red, that usually means we're in a larger bearish trend, which usually lasts multiple months at least, or like what we saw in 2022, can last for even an entire year. And in order for this indicator on this time frame to flip back into the red, we would need to see a confirmed break on the 4-day time frame back below around 24.3k in order to flip this super trend indicator back into the red and confirm a trend reversal on the larger time frames. But at least as of right now, on the larger time frames, once again, we're still seeing higher lows and higher highs, which is technically a bullish trend despite what we're seeing in the short term. And now if you're taking a look at the daily Bitcoin chart, right now the price of Bitcoin is running into this important area of support, which was previous resistance back here, and this price range is sitting in between around 24.3k, which is that level of invalidation right here, and that support goes all the way up towards around 25.3k. And so once again, it is important for the price of Bitcoin to hold above this area of support, or at least see some sort of bounce here, because otherwise, if we start breaking below this area, below 24.3k, then that is when we start to flip much more bearish in terms of the larger trend. And now if you're talking about just the shorter term, obviously the price of Bitcoin is currently in a correction phase during this larger bullish trend, kind of like what we saw back here. In fact, from the local high to where we're sitting at right now, the price of Bitcoin has corrected around 17 to 18%. And what we saw in this previous correction during the bullish trend was around a 22 to 23% correction. And so if we were to see the same sized correction from high to low, a 22% correction would actually place the price of Bitcoin close to $24,000. So as I just said, the price of Bitcoin does have a little more room to the downside before we actually invalidate this bullish trend. But what's interesting is if you're taking a look at the daily Bitcoin price oscillators, these are still currently looking relatively neutral because first of all, if you're looking at the daily Bitcoin RSI, this is basically chopping around sideways, while the daily Bitcoin MACD as of right now is showing a small amount of bearish momentum. But with that being said, we're not seeing a lot of momentum compared to some of these previous moves. So basically just in the immediate shorter term, things are looking neutral to bearish, but we have not yet technically invalidated this larger multi-month long bullish trend that we've seen since November last year. And now if you're staying on the daily Bitcoin chart, but taking a look at the Fibonacci retracement tool from swing low to swing high, on the linear settings, we have the 38.2% Fibonacci retracement level sitting at around 25.1K, which is technically an important level to hold in the short term for Bitcoin, because if we break back below 25.1K, then the next retracement level, according to the Fibonacci retracement tool on the linear settings, is the 50% retracement level sitting at around 23.3K, and below that we have this golden pocket sitting in between around 20.9K to 21.4K. And while we're on the daily Bitcoin chart, taking a look at this falling wedge pattern, which is technically still forming, it is not yet confirmed, but it is still currently forming, because as of right now, we have not yet seen a confirmed break either below this support or above this resistance, because first of all, this line of support is currently sitting at around 25.5K, and this line of resistance is currently sitting at around 27.3K. And in order to confirm a break of either of those levels, we need to see at least a daily candle close on the other side of these levels. So for example, a daily candle close below support or above resistance. And if we see a daily candle close above that line of resistance, then that would set up a technical price target at around 30.5K. But if we see a confirmed break below this level of support, then I'll simply be targeting the next areas of support that I just mentioned. And now if you're zooming into the shorter term, this is on the 8-hour Bitcoin to US dollar chart. And right now, obviously the price of Bitcoin has just broken back below this horizontal area of support, which is sitting in between around 26.1K to 26.5K. And so technically speaking, that should now be acting as short-term resistance. And above that, of course, we still have this area of resistance in the short term sitting in between 27.2K to 27.6K, where we have seen multiple rejections from. And so considering the fact that we have seen that break below this level of support, obviously this means the price of Bitcoin is no longer in this sideways range, and instead we have now confirmed that bearish signal, that break to the downsides. And so at least in the short term, as I said earlier, I'm leaning a little bit more bearish now that we have seen that signal. But with that being said, there is a possible bullish divergence forming right now on the 8-hour time frame and also on the 6-hour time frame, because we're potentially forming lower lows in the price of Bitcoin in the candle closes while forming higher lows in the RSI. But with that being said, as of right now, this potential bullish divergence is not yet confirmed, because we still need to actually confirm this next low in place. Because for example, if we don't do that and the price just continues dropping here, then it's possible the RSI could just continue dropping into a lower low, and in that case, obviously we would have no divergence at all. And so this is why we need to cement this higher low in place in the RSI with at least 1 to 2 candle closes confirming in the green, which as of right now has not yet happened. So this is why just in the short term, I'm no longer leaning just neutral and instead starting to lean more bearish in the short term. But if that bullish divergence actually confirms, then I would lean back towards neutral, not overly bullish or overly bearish, because we still have a little bit of bearish momentum in the MACD here, and a bullish divergence basically means reduced bearish momentum. So basically, if this confirms, expect some choppy sideways price action most likely. But if it doesn't confirm, which as of right now, it is not yet confirmed, then we should simply be leaning more bearish than bullish just in the short term. And in case you're wondering when I'll start to flip more bullish again in the short term, I would like to see confirmed breakouts back above some of these levels of resistance, particular this level up here, in order to flip more bullish again just in the short term, in terms of the short term trend and momentum, which of course are different from the longer term trend and momentum. But anyway, now getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart, and obviously over the last one day, we have finally started to see a break below this area of support sitting in between around 1770 to 1820. But as of right now, at the time of recording this video, this potential break to the downside is not yet confirmed because we still need to see at least a daily candle close below around 1770 in order to actually confirm this break to the downside. And if that happens, if we do actually confirm this break to the downside, then in that case, this previous area of support would become new resistance. And the next area of support to the downside is this area sitting in between around 1650 to 1.7k. And what's interesting about that area in between 1650 to 1.7k is if we see a pullback down towards that area from the high to that area, that would give us around a 22% pullback, which would give us pretty much the exact same sized pullback to what we saw back here during late February and early March, which was also around a 21.5% pullback, close to 22%. And so obviously with that in mind, it is possible to see a 20% pullback within a larger bullish trend, because of course, after that previous 20% pullback, we still continued the bullish trend later on over the next few weeks and months. And so this is why I tried to make it clear in almost every video that I put out that there is a difference between the larger trend and the shorter term trends, because obviously we can see a short term bearish trend within a larger bullish trend, just like how we can see a short term bullish trend within a larger bearish trend. And as for this larger bullish trend that we've seen since November last year, this would potentially invalidate and start to form a new larger bearish trend if we see a confirmed break below around 1650. And now if you're looking at the daily Ethereum price oscillators, obviously over the last one day with this recent drop to the downside, these have started to flip more bearish rather than just neutral, because obviously up until the recent daily candle, these price oscillators have basically been chopping around sideways, but now this daily Ethereum RSI is forming a clear lower low, while the daily Ethereum MACD is starting to show some more bearish momentum after that bearish cross that we saw a few days ago. And so at least in the shorter term, obviously these are pointing in the bearish direction in terms of the short-term momentum. And now if you're staying on the daily time frame, taking a look at the Fibonacci retracement tool from swing low to swing high on the linear settings, we have the 38.2% Fibonacci retracement level sitting at around 1730, which should be an important level of support for the price of ETH, where we also have found a bit of support just here, and also resistance back here. So once again, technically speaking, this is a significant level on the chart, and if we see a confirmed break below around 1730, then the next retracement level in this indicator is sitting at around 1.6k. And what's interesting about 1.6k is that is very close to the technical price target for this symmetrical triangle pattern, now that we have confirmed a break to the downside below this level of support, because this level of support is sitting at around 1850 to 1820, which I said in my last video. If we see a confirmed break below that level of support, obviously that would set up a bearish price target. And once again, as I mentioned in recent videos here on the channel, that bearish price target for this break to the downside now, which is currently in play, is sitting at around 1610, so just above 1.6k. And obviously so far the price of ETH has moved around 4% from the break to the downside, and from the current price to that technical price target, that's still a possible 7 to 8% drop in the price of ETH. But obviously we cannot forget about these other areas of support in between now and then. For example, this area in between 1650 to 1.7k, obviously we could end up seeing some sort of bounce in that area. And on top of that, it is worth pointing out that the 6-hour Ethereum RSI is currently oversold, which technically means just in the imminent short term, we have limited room to the downside. So we could be due to see a bit of a consolidation here, or a pause from this bearish price action in the imminent short short term, but that does not necessarily invalidate the bearish price target. So for example, we could end up seeing a little bit of a drop, some sort of consolidation or bounce, and then another leg to the downside later on, because this bearish price target and this pattern only become invalidated if we see a confirmed breakout back above this level, once again at around 1820. So basically, just in the shorter term, the trend and momentum is clearly bearish now that we have seen these bearish signals confirm. And of course, we do have these short-term bearish price targets, but as of right now, we technically have not yet invalidated the larger trend on the larger timeframes. And now, if you want to know how to maximize your profits in crypto, no matter if the price is bullish, bearish, or simply chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money automatically no matter what direction the price goes, and the video in the bottom left shows you how to make money in a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.